Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is November 20th edition of Market Outlook. So, quite the run we've had, lots of volatility in some of the outlying instruments such as the dollar and the euro, bonds. So let's take a look at what the markets are telling us at the moment. First of all, in terms of U.S. equities, it is the clear winner after the Trump election to the detriment of most other global equity markets. So let's take a look at what the internal and the health is of the U.S. equity market by itself. Well, first of all, as you know, we like to look at volume, and we went from a pretty negative situation to a really positive situation. Accumulation days really surpassing distribution days over the last 2 weeks, and that has really been a change of heart, and that is a big positive. Okay, the other thing to look at is the 1 week change. This week, diamonds or the Dow Industrials, as you can see right here, basically flat for the week, where the Russell, which is really domestic U.S. stocks, the outperformer. So just over the last 2 weeks, or since November 7th, the Russell is up about 13%. That's a pretty enormous rise over a really short period of time. So overall, pretty good digestion. You've got the NASDAQ running really well, picking up, even though FANG stocks basically under pressure. And so good performance in the equity markets. And again, more accumulation showing institutions and strong buying. Okay, let's take a look at what's happening in sectors. And there's some significant improvement there as well. So let's take a look and see what we're talking about here. So first of all, as you can see, what we'd like to do is look at how many sectors are up over the last 6 months, and we went through a significant change. We only have 3 sectors that are down. One of them is utilities, which usually as a defensive sector does well, and it has been doing poorly, right? It went from a leader to a lagger in a very, very short period of time. That is definitely a positive for the market. And again, what's happened here is semiconductors continue to be a market leader, and some of the other ones that, like utilities that had been leading, have been replaced by more like infrastructure plays and stocks more affected or sectors more affected by the Trump election and positive effect on the domestic economy, which are U.S. banks and obviously transportation stocks as well. All right, so just taking a look at the chart down here, as you can see, we really we're well above the 200, well above the 50-day moving average, puts the S&P in a bullish phase. We bounced smartly off of that 200, and as you can see, we've got a number of sectors starting to improve and be up over the last 6 months, and that is positive. So overall, I give the sector concept, sector rotation, more of a positive than a negative by far, and overall market position looking pretty decent from a pure price perspective. Momentum, something else. Market still lagging on overall momentum, and we haven't taken out the highs, and so we're paused just underneath the highs. That will be interesting to see how this plays out. I've got another chart or two to cover, so stay with it because I'm going to look at some potential top areas. If this is a blow-off, as I indicated, it's possible that the market, just like before the election, is alleviating the oversold condition, very high cash levels, and we'll take a look at where it could, if it is going to top out and this be a blow-off rally, would be the obvious place. So hang on while we go through a couple of more charts here. All right, market hotspots. As you can see, again, a couple of themes I want to point out. And one is the effect on the foreign markets. So you can see what's not hot. The 5-day trend for the week, or the 5-day, a lot of these foreign equities down in distribution to warning phases. Right, you can see quite a difference from the U.S. 6-month performance way down, Mexico getting slammed. Italy got hit really hard last week. Japan barely was able to stay unchanged. So foreign equities definitely under pressure. The big leaders, again, Russell, semiconductors, metal mining, regional banks, domestic, a lot of domestic activity doing extremely well. So there's your theme for now. U.S. and U.S. domestic stocks definitely the strongest, and foreign stocks definitely taking it on the chin relative to the U.S. So that is the big theme, and you can see that playing out here as well. And by the way, another big one is gold and gold miners really getting hit with interest rates moving up as sharply as they have. And as you can see, we went from enormous outperformance this year, was a huge trade for us, really turning into now a lagger. Over the last 6 months now, gold miners really got hit, and they certainly got destroyed over the last 10 days or so. So the whole bull case for gold, alternative currency, and the gold miners in question. Before, it was pretty much a lock that the longer-term trend was up, but this geopolitical event called Donald Trump definitely has called that into question. Okay, let's take a look at some of the market internals. First of all, we're going to take a look at the New York Stock Exchange advanced decliners. And as you can see, we started from a fairly oversold condition, certainly in NASDAQ just before the election, as we were approaching the 200-day moving average. Even before we started moving back up, we said that could be the start of a rally. We really wanted to see things improve a little bit more. Well, we certainly got that. And by the way, we're starting, not quite there, but starting to run a little bit rich. So we're not extremely overbought. Certainly the McClellan oscillator that looks out over a couple of weeks certainly has a lot more room to move on the upside. Although we paused a little bit, the McClellan is here, right? We got oversold and crossed that midpoint, and we're still on a trajectory to get more overbought potentially. Now, what's interesting is up-down volume. Volume definitely hit a wall up here as we hit new highs. Similar story for advanced decliners. Big improvement very, very quickly. That generally, that type of move up quickly and this sideways move, as you can see, similar concept that happened in what happened after Brexit. We got pretty overbought rather quickly, right? We were oversold just before the Brexit vote, right? We sold off and then got overbought really quickly. And the market worked its way sideways to up when we had that huge thrust. So you can almost say we have a similar scenario here. So we could end up working a bit sideways here before another move back up to the upside. And right now, I would call this sort of overbought readings, but not that overbought. So sort of still neutral here to slightly positive until we get yet another thrust up to confirm overbought across all of these. So I look at this as still more more extension to the upside possible on this particular chart, or these particular three indicators. So now let's take a look at what the composite is doing. Similar type reading. Look, whenever you get something this strong, what generally happens is a pause, sideways action, while working off what was considered overbought. So the NASDAQ composite, even running richer. Look at this, advanced declines, really, really strong. So I suspect some digestion up here after these three indicators work their way off, more sideways action. Sort of like what happened here is what I'm expecting. So clearly in this particular case on NASDAQ, I'm looking at a scenario, or we're looking at a scenario where it's running rich, but that huge thrust is generally considered a positive. Now, the fact that it came from what was not bearish or a climax on the downside after, let's say, a 20% decline or something more significant than even that, generally these type of thrusts result in sideways and much, much higher action down the road. The fact that this occurred from relatively high levels is a little bit more suspect, and still would not be surprised to see another strong thrust up. That could be the climax move, and we'll get into where that might end up. But let's continue on a couple of more market internals, see what that's showing us. New high, new lows in the SPY, definitely big improvement. We're now getting into a point where this is actually turning more positive. If we can clear over the 70% line here, which is that blue line, definitely would put us into positive territory. So right now, I call this more of a neutral, leaning towards following the momentum, and a confirmation above over that 70% level would certainly be adding to the bullish case. Okay, let's take a look at what the NASDAQ 100. Now, this is a dramatic shift. We went from extremely overbought and then generating this signal in here, which then generated this to oversold. And once that switched to touching the minus 30 here, or the 30% level, and moving back over, that generated a buy signal. And guess what? Now we're overbought here, so running rich, but still positive. We need a hook down beneath 70 to give us a sell signal. It's not there. We're not going to anticipate that. With the positive momentum to the upside, I consider this really strong and in positive territory regarding new high, new lows in NASDAQ. So as you can see, running a little bit rich here across these indicators, but overall momentum positive, right? All right, let's take a look at some of the sentiment indicators. As you can see, volatility really dropping down towards the lows. We are in the middle of this pretty wide Bollinger Band after that spike. This is telling you sentiment is definitely comfortable where the market is. It's not excessively positive. So overall, I give sentiment indicators a strong read for the continuation of the up move. All right, taking a look at, again, volatility in a different way and sentiment. This is looking at short-term versus longer-term or 3-month volatility, which is a good sentiment measure. And what you have here is sentiment, as you can see, start really improve off of those lows, the overall and all the moving averages, and the actual read of the ratio really positive and not running that rich, so more to the upside. So interesting. Some of the indicators running pretty rich, some of them still recovering with strong momentum. Net, I give the overall market internals a net positive. So interesting. Even with this monster rally, you got potentially more to the upside. Okay, so let's take a look at one other chart here, and just give me a moment, and that's going to be where the channels come in, and just hold 1 second here. Okay, so this is a chart of the Dow Industrials. This is the cash Dow, and it's a monthly chart, and I put in the lines based on closing prices, but I switched the chart back so you can see the penetration after the monthly bars with the wicks on them, but where it actually ended up closing, and those are where you can really draw strong trend lines. So there are a couple of things at work. First of all, you can see that there are a number of channels all working and all exerting forces on the market at different points in time. So first of all, you can see going back to 1999, you have this really nice channel here. We attempted to break it in the early part of the year, but can never close under it. Now, by the same token, we do penetrate it sometimes to the upside, these type of channels, but by the end of the month, again, that's where these trend lines are moving from. So a couple of things are happening. The trend line and the channel off of the low of the financial crisis in 2008 and 2009 is pretty clearly defined between this as the up channel and, right, this is the lower boundary, this is the upper boundary. Now, going back to 2000, you have this trend line up here, right? So in essence, a potential top could occur, right, at about 19,500 or thereabouts. So you're talking about another 500 to 600 point move where we might start looking for a potential top. Now, if we blow through there, right, our next line of resistance and potential sell point to sell against this would be this bigger channel here. So the longer term channels exert a much more important influence. It's like the mass of the channel. The longer it's been in effect, the more powerful it is, and certainly the more times it touches. So right now you've got a valid channel going back to starting in the early part of 2000, 2001, and we hit it 1, 2, 3 times. And by the way, the convergence of the upper boundary of the shorter channel that started in 2009 was really the height of the move in 2014, 2015, and then the significant drop. So we digested it, held the upper end of this channel, and now, again, what we want to look at is between 19,400, 19,500, and that could be a potential area of resistance. Now, if the market, in fact, is not in a blow-off stage, you would look for it to violate this particular upper trend line. And then, obviously, you've got this particular channel, and then this longer one, really going back to the high in 1987, right? So if this market is really in good shape, we're going to end up violating this upper end of the trend line or channel line, attacking this one here, and then you're really off to the races, and you're talking about potentially, multiple years of increased performance. So first line of resistance here is that 19,500, 19,400, and there you have it. So that's what we're looking at right now in the Dow. I also did it for the S&P, and well, it didn't save the trend line. Well, in this particular case, you've got a scenario in the S&P where, again, if we can clear the overall highs, right, we still haven't taken out the all-time highs. That would be a real confirmation here. What I see is mostly resistance quite a bit higher, around 225 to 230. So you're talking about another 5 to 6% move to the upside in the S&P on the primary channel that occurred since the 2008 low. So if you take this particular channel here, very similar concept to what we were looking at in the Dow. Now, what we can do is also take a look at what the channel looks like, just like what we did with the Dow. So you've got, again, potentially your next line of defense. If we violate and take out the new highs, there's obvious resistance, probably right up around. Let's zoom in on this here and see what we're talking about. You're talking about a move around 225. So again, just 2 to 3% higher from here, and it could run into major resistance. But again, if we can power through that upper trend line that I have up on the sheet and up above 225, you could really propel a major rally, and any bet that this is a blow-off would be incorrect. So again, 2-3% up from here is your critical level to watch for a reversal in both the S&P and in the Dow. Okay, hope this helps. See you next week, and bye for now.